Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we're going to write checks for expenses within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be entering some checks now, kind of some normal transactions, entering some checks. In order to do that, we're going to go to the plus sign up here to see our normal transactions, where we have the customers, the vendors, the employees, and the other. When we're writing checks, we're typically writing them to vendors, people we owe, people we buy stuff from. That's where the checks will be. We're going to select the checks item there, and we're going to go through this process for writing the check. So obviously this is a check number. It's going to be then reducing our checking account, and the other side will be going to whatever account we decide that it needs to be going to, depending on what we're paying and who we're paying. So first we're going to say that we have insurance. So we're going to pay for insurance of some kind, probably liability insurance we're going to say here, and we're going to say the name of the company is Safe Insurance. So we don't have that name here yet. We need to add them. So I'm just going to type that in. So we're going to type in Safe Insurance. And then we're going to select the add button. So we're going to add it, and it's going to add it as a vendor. So we want it as a vendor. That's correct because we're paying somebody, so that would be correct. We'll continue tabbing through here. So we're going to have this from the checking account. That is correct. We're going to have the mailing address. We'll keep it at just the mailing address. We don't need the actual address here in order to process the check, but it might be good information to have. Then we're going to say the payment date. The payment date is going to be 012821 for our problem here. The check number should populate automatically, so that should be correct. Remember that the check number should tie out to whatever checks that we are going to be using. Whether we use pre-printed checks that we're going to be printing on here, we still need to use those checks, which will have a check number that will be external. And or if we're using just a checkbook or something like that, it should line up. And then we have the print later button if we want to print these checks at a later time. And we're going to scroll down to the account now. This is the thing that, of course, is different than what we would normally put just in a checkbook, which is the account that we need to apply this to. Insurance is a little bit tricky because we would probably think it should go to insurance expense, but typically we put it into some type of asset account because usually we pay for insurance more than just a month at a time. And any insurance we usually prepay, meaning we have to pay for the insurance before we get the coverage. So it should go into a prepaid account, an asset account, and then we'll apply it out with the adjusting journal entries at the end to an expense at the end of each period, at the end of each month or year, and we'll go through that process as well. So what we want is something like a prepaid insurance account. If we go through the drop down here, we see that a lot of expenses here. We see an insurance expense, and that's tempting to do, but we really should put it into the prepaid. And the reason is because if we pay for a year here of insurance, then if we put it all into an expense this month, it'll look like this month was a really bad month because that will bring down our net income a lot. And really it's covering an entire year. It's not really fair to the month of January to write down the whole insurance expense. So we have to really apply it off to the year that will be covered to be fair to all months that are really benefiting from the expense. So in order to do that, we're going to put it into a prepaid expense, other current asset account, not set up yet. So we're going to go ahead and set that up. We're going to just type in what we want it to be, prepaid insurance, and then we're going to add that account. And we're going to choose the account type. It's going to guess that we want an expense, but we don't. We want to put it into an other current asset account. So it's going to be an other current asset here. And then the subcategory, we have a few different options for the subcategory. Here we have a prepaid expenses option down here. That looks like a good one. We're going to use the prepaid expense option, and it's going to be prepaid insurance. There's going to be no other description. It's not a subcategory of any other account. We don't have any beginning account balances as well, so that's we don't need that cell at all. And we will then save this information. Description, we don't have one here. We might want to put one if it's possibly how long we're paying this insurance for, possibly the terms of the insurance, but we're probably going to have to look at the contract when we do the adjusting entry no matter what. And then the amount, we're going to say the amount is $11,000. Now, we're not going to say it's billable and we don't have a customer. These two fields were set up because we set up the option to have these set up. If you're working with the default settings, you may not have a billable option as well. This would be billable, meaning it's billable on our invoice, meaning we're going to bill a client for this information. So that would be useful there if we had a customer that we were going to bill for that information. So once again, just to recap this is going to be decreasing the checking account. And the other side of it's not going to go to an expense, not going to decrease net income by $11,000, but go to another asset, that asset account being prepaid insurance, which will be expensed in the adjusting process, but on a monthly basis in accordance with when it's consumed rather than when we pay for it. So we're going to go ahead and save and new for this one. Next, we're going to write a check for office supplies, and we will go to the financial statements and check out what happened there. But first, let's write a few more checks here. We're going to go to office supplies, and we're saying we're going to buy office supplies from Staples. Once again, if we select the drop down, we're looking for Staples. It's not there, so we're going to type in Staples, and we're going to add that. That's a store, of course, we're adding, which will be a vendor. So we're going to say save here. Tab through, it is the checking account that we are going to be writing the check from, decreasing the checking account. No mailing address, we just have the name. The date's going to be as of the end of the month. It's keeping the last date that we were working on. That's good. January 28th, 2021. And the check number should auto-populate. We're not going to be printing these. And the check and the amount then, or the account then, we're going to say it's going to go into some type of supplies. So we're going to scroll down here. It should be an expense. And if we scroll down, we can look through here and we have office supplies. If we were to just guess and type in, even if we didn't start with the office and we just typed in supplies, it still finds that. It doesn't have to start with the word, and it still kind of picks it up. So we can start to auto-populate that if you have a lot of accounts. That's very useful. And select this item. Could be helpful to tell us what the supplies are, especially if it's $500 maybe. When someone audits this, they might be saying, maybe we should have capitalized that or something like that, because we're going to say the amount is 500, by the way, 500. And therefore, so you might want to put in what the supplies were, meaning do we want to capitalize it or not? If it is big enough that we should be putting it on the books as an asset rather than just writing it off as a supplies here. But in this case, we're just going to write them off as supplies for this problem. And that will say that the checking account, once again, going down. The other side being office supplies and expense, which is going up. And that expense would then bring down net income. So then we're going to say save and new. Once again, save and new. Next check we're going to write is going to be for the electricity, for the utilities expense. So we're going to say that we get our utilities from a company called Edison. So we're going to type in Edison. This is the first month of operation, so note we don't have these vendors in here, but later we will, and it'll be really repetitive. So it'll be really easy next time we see a bill and we're going to say Edison, it's going to be able to auto-populate for us, and we'll know exactly what is happening. The first month of operations, of course, is a little bit more difficult most of the time because we have to set up vendors and possibly accounts for them. Then accounting's cyclical, so obviously we're going to do a lot of the same stuff after that first point. So here we have the vendor, and then we're going to say save that information. Going through, we are working with a checking account, of course. It's Edison. We're not going to put any address at this time. The date's going to be January 28, 2021. Check number 1008. We're not going to be printing this out. And the account then, we're going to say is utilities. We could select the drop down and find utilities. They probably are going to provide one through the QuickBooks automatic generated trial balance or chart of accounts. We could start typing utilities, and there it is. So we're going to say utilities and tab through that. And we are going to say the utilities is 620. Once again, it's not billable. We're not going to be charging any invoice for the utilities or be charging a customer for the utilities. So this will, of course, bring down the checking account, bringing up utilities expense being part of net income, then bringing down the net income on the profit and loss statement. We're going to save and new for that one. Next one, we're going to say that we're paying the phone bill, and our phone company is Verizon. So we're going to type in Verizon, again, new vendor, because this is the first time we paid Verizon in this system. So we're going to have to add Verizon here, add them, and save that. After we do that, however, of course, next month, this will be a lot easier, and we'll see that as we go through. It'll be able to auto-populate that information. Checking account, of course, is going down. Mailing address, we're just going to keep the name and not the address. The date, once again, is January 28th. We're printing all these checks or writing them all at the same time. Check number is auto-populating, as we can see. We're not going to be printing these checks. And the account then will be something like a telephone expense here. Now this is one where it gets a little bit more tricky because when we think about these expenses, of course, we have a lot of leeway in terms of what the grouping should be. Oftentimes people think that the grouping for the expenses is totally standardized, and there's a lot of standardization in the types of groups that people use, but we could group them in different ways, meaning, for example, here some people might put this into utilities and group the electricity and the gas and even the telephone in utilities. Others may want to break this out. Most people, I think, would break out the telephone expense because it's significant. But the gas versus the electric, possibly you want to break that out depending on the industry you're in. Possibly it's not worth the time to break that kind of thing out. So those are the decisions that need to be made. How detailed do we want to be in our expenses? More detail is good a lot of times because it gives us more information about what we're spending in particular areas. But it also, if we have too much detail, we are just not going to look at anything. It's like if you're given a book that has 10,000 pages, you're probably not going to read page 1. If you're given a book that summarizes that down into a few hundred pages, then you can probably read that book. So we're going to say that here we got the telephone. Let's type in telephone and see if anything pops up. So we don't have a telephone expense, so we're going to go ahead and add telephone expense. So I'm going to go ahead and add this expense. Now note, a lot of times, like I typically put expense in the name. Here, they're going through the strategy of not putting expense in the name, and you can tell that it's expense by the fact that it's in the expense category. So when it shows the category, you can see that if you like having expense in the name to just tell you that it's an expense, you can do that. If you want to conform everything together, you can have expenses in the name of all expenses or not. But if you don't have something like an expense in the name, you have to look at the category type to know it's an expense. Obviously, something like the telephone would be easy to know, but if you're looking at something like insurance, which had that prepaid insurance, it's not so easy to know. So just another conventional thing to think about. So here's the expenses up top. We're going to say it's not going to be advertising or promotion. Let's see what else we got in the detail type. So within the detail, I will just select the utilities. So utilities, and then we're going to name it telephone expense, no description, and not selecting anything for the subcategory. We're going to go ahead and save that information. And then we're going to say that, of course, what's happened here, the checking account's going down, telephone expense is going up, and we need the amount here by 360. It's not going to be billable. We're not charging anybody else for our telephone expense to our customers that we will later invoice. And therefore the telephone expense is going up by 360, which will bring it down net income by 360. We're going to say save and new. Now we'll take a look at the financial statements and see what happened with some of these activities we have done. We're going to go ahead and close this back out. We will go to the balance sheet first. We're going to go to the reports on the left-hand side, reports, and then we're going to type in balance sheet. Here is the balance sheet. And we're going to put into the date range, the date we are working on, 01/01/212, 01/31/21, and January 1st, 2021 to January 31st, 2021. Let's run that report. Within the checking account up top, we wrote a bunch of checks, so this account should be going down. Let's see if it's going down as we believe it should be. Here we have the, I'm gonna make this a bit smaller. These are all checks. I'm going to go ahead and make this a bit smaller. And maybe this a bit smaller. I'm just grabbing this and making this a bit smaller. Alright, so then we can see the insurance company, staples for office supplies, utilities, and telephone expense. So there they are going down in the checking account. Let's look at the other side of these activities, or at least some of them. So we're going to scroll back up to the top. We're going to go back to the report. Now the funniest one is the first one where we had the insurance expense. We didn't put it into an expense. It's right here on the balance sheet. It's in the other current assets accounts. So there's the insurance for $11,000. It's not affecting net income. We're calling it an asset. All we did was pay from the checking account to buy something we have not yet consumed. When will we consume it? As we use it in order to help generate revenue over the term of the insurance policy, as it's covering risk for us. So here it is. Here's the insurance. If we click on that, then we will of course go back to our check. So let's close this back out. The other accounts, or the other side of them, will be going to the other report, the other main financial statement, the income statement, or as QuickBooks calls it, the profit and loss. So we're going to type in the profit and loss report here, profit and loss. We're going to change the dates from 01/01/21 to 01/31/21 and January 1st, 2021 to January 31st, 2021. We will run that report. And then the other side of this is going to go here. So we have these three expenses that we just set up. The office expense at the 500. If we select that, then we see the check. If we select the check, then we see the actual check. Closing this back out. Going back to the report up top, back to the report. If we see the second one, of course, we can do the same thing. I won't click on them all, but here are the three checks. These are all expenses. Note, again, the convention that I put telephone expense here. If we're following the convention of the chart of accounts that were given to us through QuickBooks, they did not put an expense on all the expenses. And we know that these are expenses here because, of course, it's in the expense category. But if we were to see them within a check, for example, if I went on this check or the utilities, let's go here, utilities, and I go into this check, when you just look at the description down here, something like this, it just says utilities. You don't see the fact that it's an expense. Now, of course, we probably assume it is, but we can't see it there. If you go to the drop down, however, then it's going to give you the subcategory on the right hand side, and you say, oh, it's in the category of expenses, and that's why I think QuickBooks sees it as repetitive to say everyone is an expense. So we're going to close that back out. So that's just a convention to keep in mind. Some people might think it's sloppy to add an account and put expense by it when none of the other ones have expense by it. Just, a couple things to keep in mind. Also, we could be grouping these things together. You got to keep in mind your grouping. I've worked with customers that, really like detail, and they group everything, even if it has like a $60 line item. If you got a $60 parking ticket, instead of putting it in the auto expense, you'll put it in the parking ticket expense, and probably might not be worth it because although you might want to track how much you're spending on parking tickets, it might be a one-time thing that's not worth breaking out into its own category and setting up different accounts for. So there's just the grouping is something that you just got to get a feel for in terms of your personal taste and the taste of your company, and keeping consistent with what has been done in the past. You don't want to redo the whole system. We need consistency, or if you are to redo the whole system, do it in a either one full swing and say, hey, we're starting everything over here, or do it in a slow, systematic kind of way so that you can have some consistency and see the changes from report to report. Hello, in this presentation, we will write checks for expenses within the software of QuickBooks Pro 2018. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. We will also be demonstrating at the same point this Write Checks icons. We will be writing checks for expenses using this Write Check icon to write the checks. If you have access to the backup, then you could restore that backup by going to the File and Restore Company File. That will take you to this specific point if you have access to get to that specific point, thereby not having a problem of having an error possibly in the past, not having the same amount of data, not being on the same page. We'll make it as easy as possible if we are all on the same page. However, if you don't have that, that's okay too. We will be covering the write checks, and you can see what's going on with that. As we do enter more data, these types of problems here, we'll be entering data. It is nice to be at the same point. We would like to be at the same point, both at the beginning and at the end of the problem, basically to see if we're getting everything in there in the same format, in the same way. We have the Home tab open here. If you don't have the Home tab open, you can go to the Company and Home tab to open that up. I'm also going to open up the open windows, which are not open when I first opened the program. I'm going to go to View and select the open windows, and therefore show what is open, the only thing at this time being the Home tab. So we're going to write some checks, and we're going to write checks in this time just paying, in essence, the monthly bills. We're going to be paying normal types of bills, normal types of transactions. It can be useful, and we will see at a later time how to enter the bills here. First, putting it into accounts payable, and the related bill, the related expense typically, and then pay the bills all at the same time. That's one format of doing this. This format is also good in that you can put the bills in and then pick and choose which ones you want to pay, thereby having the ones that you don't pay still in the queue, still being recorded as an expense at the point that you put the bill in there. We here, however, are going to skip that first step, and we'll practice that later and just go directly to the writing checks. So we're going to use the write check icon over here in order to write these. Now note, you could also use the check register just as a third option, that being in the banking section, and then going down to register here, entering this information directly into the register. Why would you use one or the other options? This option on the bills gives you a bit more flexibility to pick and choose which checks you want. And you can also have a printing option when you print all the checks at the same point in time. In a couple different ways, you can print all the checks at the same point in time. Now, if you were to buy checks and print them through QuickBooks, then you're going to have pre-formatted checks, and you want to be able to print those all at one time. So you're going to have to put those checks in the printer, make sure they're facing the correct direction, and then print all the checks at the same point in time. We're not going to be actually printing the checks here. And if that were the case, if you were a small business or you needed to enter the checks into the system in order to then reconcile, in order to have the data within the system, although the checks had been written outside of the system, then sometimes the fastest way to do that would be the check register. We here are going to practice using this icon, just the write checks. We're just going to write checks, and we're not going to be actually printing the checks here. We're just going to be we're going to be entering the data here. The print checks item would be the same way, except then we would go through the process, of course, of printing the checks, which does mean that you would need to buy the external checks and then put them into the printer in the proper way in order to print those checks out. First check we're going to write is for insurance policy. So we're going to click on the write checks here, and then we're going to go through this. We got a familiar looking check, pretty self-explanatory type looking check. The check number will populate on its own. If we were to be printing checks, that check number then should match the check number that is already on the printed check. That's one of our major internal controls over the checks if we were to be printing these out from QuickBooks. Then we're going to put the date, which is going to be 01/28/21. We will be working this entire problem. That's January 28th, 2021 in 2021. The payee, we're going to have Safe Insurance Company. Now note, I'm typing that name in. This is the first time that we have paid them. This is a relatively new company. Instead of having typed in new here, I'm just going to type in the name, often being faster, and then select tab, and it's going to say, do you want to add that? And we're going to say yes. Now, most of the vendors, all we typically need is basically the name in order to write the check. But if we want to have a full setup, we would go to the full setup, entering the date, entering their address and their phone number and whatnot here. In order to write the check, we're going to do a quick add, adding the information quickly. And we're going to select the vendor. That's who we're going to be paying, or what we are being paying, as opposed to a customer, employee, or other. And there we have that. The amount is going to be $11,000 that we're paying. Tab. And this will populate on its own. We could put the memo here. I'm not going to put a memo at this time. And note that we have the expense tab versus the item tab. The expense tab will typically be the default tab. The item tab, remember, normally that means we're purchasing inventory. So when we're on the items tab, we typically have some different areas here related to typically inventory. We're going to go back to the expense tab. What is confusing a bit on the expense tab is that the expense tab includes both expenses, and it's basically everything other than inventory is going to be here on the expense tab. So in this case, for example, we bought insurance, and insurance really should be in a prepaid insurance, and then we should have an adjusting entry at the end of the time period, that in accordance with our matching principle. For example, if we wrote this entire $11,000 off this month, and then we had no insurance next month, that $11,000 would make our net income look really low this month in comparison to next month. And so what we really should do on an accrual basis is put it on the books as an asset and then divide it out over the number of months that it is covering, assuming this is covering more than 1 month, and then divide it and then expense it evenly so that our net income reflects the use of the insurance, not the fact that we prepay for example, a year of insurance in the first time period. The point of that is that we're not going to be recording an expense here. We're actually going to be recording an asset account called prepaid insurance, even though we're using this expense tab. So note that this expense tab is not really properly named. It's basically everything other than an item tab, the items typically being inventory items. So we're going to have prepaid expense. So we're going to say prepaid insurance. And we don't have prepaid insurance yet. That's why I'm going to type the entire thing in here. If we were to look through here, we don't have prepaid insurance. We possibly have insurance expense. And if you were to choose that, that wouldn't be total. That would be okay, but it would probably be the fact that we would be expensing multiple months of insurance in the month of payment, and it would be more proper to set up the prepayment. So we're going to set up the prepayment, and then we're going to do the adjusting entry at the end of the month here. So I'm just going to type in the account that I want, which is going to be prepaid insurance. Instead of selecting add new and then say tab, it's going to say, do you want to set that up? We don't see that account. We're going to say, yes, please set that up. And as we set it up, then we are not going to have an expense. That's the default. That's what QuickBooks is always going to default to, because most of the time it'll be correct that it will be an expense. But in this case, we're writing a check decreasing cash, and the other side of it is actually going to be an other current asset account. So we're going to choose other current asset account and then say continue. And there's our accounts under other current asset. It's a prepaid insurance account. We don't need a description. It's not going to be a subcategory, and we're not going to be dealing with the tax line at this point. No opening balance. We're never going to be dealing with that opening balance line again since the point in time that we started the company. So we're going to say save and close, and there is that. So what is this journal entry going to do? What is this check going to do? We know one thing, it's a check, and that means it's going to reduce the balance in the checking account. The form itself means that, and that's the case with most forms. We know that this being a check means it's going to be decreasing the checking account. The checking account here on this drop down, we only have one, that being the one then that it will be affecting. Then the other side is the one that we're going to choose down here in the expense side. Prepaid insurance, an asset in this case, going up. So let's record this. We're going to say save and close, and then take a look at what is happening in terms of the financial statements. Let's take a look at our main two financial statements. Those, the balance sheet and the income statement. We're going to go to reports up top. We're going to go to company and financial, and we're going down to the balance sheet standard. I'm going to customize the report in order to get a date range so that when we drill down on the information, we will have a range when we're looking at the transaction detail or the general ledger. So we are going to make the dates 01/01/21, working in January 1st, 2021 to 12/31/21. We're going to choose the whole year of 2021, the year that we will be working in. And then we'll select OK. There is our information. First, the checking account. We believe the checking account should be going down by the check that we have now written. Double-clicking on the checking account. Scrolling down, there's that 11,000 right there, decreasing the checking account balance. If we double-click on that, there is our check. Closing that out, the other side of it, note we put into prepaid insurance. So if we scroll, that's also an asset. Where am I going here? We're going to stay up here. There's prepaid insurance right there. It's an asset. There's the 11. Double-clicking on that. There's the activity, the check in our transaction by account. And we're going to double-click on that. And there is our check. Closing this back out. You may be asking, why is that here and not on the income statement? And part of it, at least, should be on the income statement. And that's what we'll do at the end of the month. We'll do the adjusting journal entries to expense part of that prepaid insurance that has been consumed, the month's worth of it that has been consumed for that month. Next check we're going to go back to the Home tab. we're going to enter another check. This is going to be for supplies. So we're going to go back to write checks. I'm going to click on write checks. It's going to be at our checking account again. We're going to say that the number is the same again. Well, the number's pre-numbered, so QuickBooks should have that. If we're writing the checks, it should match our checkbook and or the checks we're going to have to print within QuickBooks. The date is going to remain at January 28th, and we're going to get this from Staples. We're going to say another new vendor. So rather than going up here and typing add new, we're just going to type in Staples, the new vendor that we would like. We're going to select tab, and it's going to say, do you want to quick add that? And we're going to say, or do you want to add that? We could use the quick add. We could use the setup. The setup then allowing us to enter the address and the phone number and a lot of other information. The quick add giving us the name, all we need typically to write an actual check. We're going to do the quick add at this time. The vendor is appropriate. It's always going to guess vendor when we are writing a check because it's typically a vendor we are looking for as opposed to a customer or other or employee. And therefore we're going to say OK on the default. We're going to say we spent $500 of this check will be for $500. Staples, I'm not going to write a memo. And the expenses, once again, it's on the expense tab. And we're buying, in this case, office supplies. So we're buying supplies. I'm going to imagine we're buying like computer ink. And once again, supplies is another one of those areas where we may just expense it if 500 is a relatively small amount in comparison to our revenue, meaning if capitalizing it and tracking the supplies is immaterial in relation to our income, we might just want to write it off. But oftentimes book problems will put the supplies on the books, and oftentimes in real life when the supplies is significant, we will want to track it in a similar way that we track inventory. So therefore, typically we put the supplies first on the books as an asset, and then we would expense it over time. That being said, however, if the supplies is a small amount in comparison to the net income, it will just be expensed in that case. In this case, right here, we're going to put the supplies to the expense account, not doing the adjusting entry of adjusting the supplies account, writing the supplies in case directly to the expense at the point of purchase. Just be mindful if you're working in an area where the supplies are significant or a book problem, you will typically be capitalizing the supplies, putting it on as an asset of supplies, then adjusting those supplies at the end of the month. So we're going to put supplies expense actually we have a supplies expense office supplies. So the book is calling the office supplies is going to be the account we will be going to here. Now note that I was putting in supplies expense, and that would be the account name that I would have chose if I was to choose them on my own. The office supplies is what was already in the system given the fact that we had a chart of accounts prepared by QuickBooks. So it's just a slight variation in the name. However, it's useful to go through there if you have something that's going to be an expense such as this and take a look and see if there's going to already be an expense that has been generated similar to what you would be using through QuickBooks when we generated the software, when we first installed the software by choosing the type of industry, this type of industry being a manufacturing, or not a manufacturing, a merchandising company. Now we do know that it's an expense and not an asset by the fact that it shows us an expense over here. So we are talking about office supplies an expense, not office supplies an asset. So we'll select tab. There's the 500. What will be the effect of this check on the financial statements? 1, the checking account will go down by 500, the amount we paid. 2, the expense will go up by 500, bringing net income calculated as revenue minus expenses down. Let's see if that's the case. We're going to say save and close. We're going to go back to our balance sheet. Once we do, it will refresh automatically. So we are in the Open Windows tab, opening up the balance sheet. We can take a look at the checking account here. Checking account, double clicking. Scrolling down to the 500, we see our item. Double clicking on that 500, we see the check that has been written. The other side will be on the income statement, so we'll close out this, close out that. go back to reports, looking for the income statement, which QuickBooks calls the profit and loss. We will go to the company financial, scrolling down to the profit and loss. Actually, it's the first one, so we don't scroll down. We're going to go to the first one, profit and loss standard. We are going to change the date range to the current range we are working in, 0101 212 12/31/21. And we should have then office supplies. First amount that has been input into office supplies yet, that is that 500 right there. If we zoom in on that, we see the office supplies here. Zooming in on that, we see the actual check that has been input. If we close this back out, we see that net income then decreasing by the office supplies from gross profit down by the 500 to the 225.40. Next check, we're going to go back to the home and see what we have next. We're going to pay the utility bill to Edison. So we're going to write another check and see what happens there. Writing check. We're going to go to tabbing over. The check number will be populating on its own. Hopefully it will match what we have on the checkbook. We have the date is going to be the same. We're going to write it to Edison. Now, once again, we don't have Edison in there yet for our power expense, our power bill. And that's because it's the first month. Note that all of these are the first month. So if we were to do this, when we do this next month, then all these customers will already be in there, as will the accounts populate depending on the preferences that we have. So when we do this the first month of operations, of course, it's a bit more detailed, a bit more challenging. We want to put more time into it to make sure that we lay the foundations for doing everything the way we want to go forward with, because after this, much of this will just populate on its own, and it'll be a lot easier when that is the case. Just hopefully it'll be set up properly. So you may want to get help then to set the first month up to make sure that the accounts are all proper, and then from there forward things become much easier. So we're going to type in the name. It's a new vendor, so we're going to say tab. It's going to say, do you want to set up the new vendor? We're going to say yes. We're not going to do the full setup. Once again, we just need to do the quick setup at this point to include the name in order to write the check. So we're going to go a quick add. Vendor is the default, which is a correct default. So we're going to say OK. The amount, we're going to say is 620. And we have this 620 there. Then we have the address, no memo, and expenses are going to be, we're going to call these the utility expenses. So if we type in utilities, it has one there. We had not made that account. That account was generated from QuickBooks when QuickBooks was set up, when we selected the type of industry, this type of industry being a merchandising type of industry. We have the utility set up. We know it's an expense type account here. Looks correct. Therefore, that's what we will use. 620 is the amount. So we're going to go ahead and say save and close after we think about what this is going to do. This is going to decrease the checking account by 620. And it's going to record an expense, utilities expense, increasing 620, bringing down net income by that 620. So now we're going to say save and close and see if that is indeed the case. So we will go over to the balance sheet, which is going to refresh when we select it. There's the balance sheet, cash account, checking account up top. Double clicking on that, we see the decrease here of 620, it going from 114,585.50 down by 620 to 113,965.50. If we double click on that amount, we see the check that has been generated or that we just made right there. So we're going to close this back out. We're going to close this back out. Then we can go to the profit and loss and see if it does what we believe it should on the profit and loss, that being an increase in the expense, utilities expense. There's the 620. There's the 620. There's the check. Closing this back out. Xing out. Xing out. There's our two checks, and now we're currently at a loss here because we had gross profit of 725, minus those two expenses, bringing us to a loss of $394.60. And so that's going to be the second check. We are now going to write the third check. We're going to go to the Home tab, back to Write Checks. So we're going to be over here, Write Checks. And this check, we're going to be writing the phone bill. So it's going to be from the checking account. We're going to have the check number populate automatically. Date is going to be January 28th. That is correct. We're going to write this one to Verizon. Once again, this is the first Verizon. This is the first time that we have written a check to Verizon. So we're going to have to enter that information here and then add Verizon as the vendor, as we will do and as we have done in past transactions. Once we do this again, remember Verizon will self-populate. It'll already be there when we start typing it in after the first month of operation. Once we select tab, it's going to say, do you want to set this up? Once again, we're going to do a quick setup. Say, yes, we would. Vendor is the correct default, so we will keep the vendor as the default. The amount is going to be $360. We're going to tab through this. No memo. We're going to type the account. The telephone expense is also an account that will be generated typically almost any type of business that we make within QuickBooks. So if we choose an industry, just about any industry will include the expense account telephone, so you shouldn't have to generate that expense account. We can see here once again that it is an expense account, so we're going to tab through that. Looks like what we need. What will this do? Bring down the checking account, 360. Increase the expense account, 360, bringing down net income by 360. Save and close. Let's see if that's the case. Back to the balance sheet over here. It's going to refresh automatically. If we double click on the checking account, we see that 360 here for the Verizon. If we double click on that, there is our check. Closing this back out. Closing this back out. We're going to go back to the profit and loss, and see the other side of this transaction, that being the telephone expense here. If we double click on that, we see the checking account. Double clicking on that, we see the check for the telephone expense. Closing this back out, closing this back out. There's the effect, bringing net income down. We now at a loss of $754.60. If we go back to the Home tab, that's going to be that, and those are going to be the checks we have written with the right checks. Note once again that there's a couple different ways we could go through that, and we'll take a look at some of them in the future. In the past, we looked about how to enter this same data directly into the check register, banking, use register, enter that data directly into the check register, and two, we'll see how to do that first by entering a bill, and then by paying the check, paying those bills, of course, with a check. At a later point, we'll take a look at that option.